Okay, this is Brick. I thought I'd do a video to let you know what I look for when I'm looking at an SEC filing. A new filing that comes out, I'll look at them and see if there's any substance in it. Most of the time, it's not. And I pulled this one up today because it came out, and just at random, opened it up and started looking. Now let me point out the things that I find. Okay. Ghost Technology Incorporated. I have no idea who they are or anything. I know nothing about them. But all I know is what they have in their SEC filing here. 179 million shares. I'm sorry, 179 million shares outstanding as of February 8, 2011. Okay? So I'm going to drag in a level 2 here. As you can see that it last traded at 30 cents, unchanged on the day. If I pull in a calculator here, let's do some math. Uh, Remember, 30 cents a share, zero point 0.3 times, we'll say 179 million. It's $53 million company we're looking at here, okay? 53,700,000, and I just said 179 million. I just rounded it off. So keep that in mind. $53 million company, okay? So I scroll down, and first thing I look at is assets, okay? They have 3,419, okay? So if they want to go buy stamps or go buy a bus ticket to ride up to Chicago to get business or whatever, they have $3,419 in which to do that with, okay? Total current assets is 5169. The current part of the assets means less than 1 year, okay? They do have total assets of 596. Uh, so if we scroll down to liabilities, we see that their total current liabilities is $225,000. Now this is money that should, or bills that are owed or should be paid within a year. Okay, that's the current portion of it. So now they have $3,400 in which to pay $225,000 in current liabilities. So that should bring up a flag there to you. I'll quickly go down to the equity. They have 179 million outstanding. I also like to look at the previous uh, period, which is June 30th. They had 175 million. So they had roughly, 3 to 4 million shares issued um, since the last reporting period. Okay. So the next thing I want to look at is the preferred stock. This is always interesting to me. If I ever want to put money into a company, I want to know if they have preferred stock because there's two reasons generally that I found why there's preferred stock. Number one, for voting rights, they'll issue preferred shares and it'll be at a ratio, 10 to 1, 1,000 to 1, 10,000 to 1, which means for every one share of preferred shares, they have voting rights equal to some number, say 10,000 or whatever the number is, of common shares. And they do this so that they can control uh, things uh, about the company. They don't have to go and get shareholder approval to um, do a reverse split or whatever. They just do it through the preferred voting rights. Okay. The other thing is a lot of times they'll have preferred stock issued that is able to be converted to common stock. And they do this so that they can kind of keep from overinflating how many shares are outstanding in the common and that sort of thing. To me, it's shady. It's a way to hide the common share structure. Okay, so we scroll down and here's another flag. This is bad. Since 1999, they've only had $85,000 in revenue. In over 10 years, they've had $85,000 in revenue. And of course, no revenue for the last 3 months of 2010 and 2009 also. They have no revenue. So they don't have a product they're selling or a service they're offering. They don't, they don't have any money. They have $3,400 or whatever it is to pay bills with. It's not looking good. Net loss here's $281,000 for the last 6 months. It's just not looking good. They did have $87,000 at the previous reporting period, and now they have 34,000. Okay, I'll scroll down, and a lot of this is fluff. Uh, you know, just standard stuff that you find in 10Qs. Going concern, I like to look at this. It's kind of funny in a way because most of these companies that have no revenue of any sort put this kind of verbiage in there. It says the company believes its current available cash along with anticipated revenues may be insufficient to meet its cash needs for the near future. Well, you think? I mean, come on now. Zero revenue is probably not. Company may need to incur additional liabilities with certain related parties to sustain the company's existence. Um, right here, the company board's authorized offering of common stock at 20 cents a share. Okay, so they're going to issue common stock at 20 cents a share. It doesn't say even how much, but or how many shares. But if you look at the level two, 20 cents a share, if whoever gets those shares, it's going to be in their best interest to keep this price action up above 20 cents. Okay. Let's scroll down quickly. They've got loans to related parties. They list how they issued all their shares for this, that, and the other expenses, so forth. Here's this is kind of unusual. They actually put what the preferred stock issuance is for. A lot of times they don't do that. At least I haven't seen it. But right here it just says voting rights. It's non-convertible. It's not convertible to common shares, but it's being used for voting rights. 25,000 to 1, in fact. So if there's 2,000 preferred shares outstanding, then that means it's 50 million shares that are able to be voted. So this creates a block. This creates a block of voting, so that whoever holds those shares can get things done quicker, or without having to worry about shareholder, um, you know, having their say on something on matters that they don't want to see happen, like a reverse split. It's very easy for a reverse split to happen when there's a bunch of preferred shares with big ratio voting rights out to happen on stock. So that's a flag right there. I don't like companies that have preferred shares. It's just because a lot of times you don't even know what they're for, but at least we do here. At least it's not convertible, number one. So, and it shows here where they had contributed capital. Authorized shares was increased 300 million. Well, they had to do that to keep issuing shares because that's how they make their living, by issuing shares to sell to you at some price. They have no revenue, so they've got to pay bills somehow. Uh, a lot of this is restating what's went on in the financial statement, so I just keep on going. Okay, unregistered sale of securities. 4 times in the last 3 months. $50,000 investment of 250K shares. That's about 20 cents a share. Okay, for this investor right here. Oh, look at this. Investor Relations Services. 75,000 shares. In issued for investor. Why would this company need investor relations when they don't even have a product? They don't have any revenue. They don't offer any services. All they do is sell stock. That's all they've done since they've been in existence. Yet they have a investor relations firm. Now, why would they do that? Because they need to issue more shares. They need the price of the stock to maintain a certain level so they can get more bang for their buck. Okay? We scroll down and there's probably nothing else. Yeah, there's nothing else. Okay? This is pitiful. I don't even remember what the name of this company is. Don't really care. That's not the point. the point is, companies like this exist out there. It's not benefiting the shareholders, that's for sure. Who's it benefiting? Here's a chart. It's over about 4 months. Started out around 14, and it went up to close to 80 something cents on kind of light volume, but sporadic, but a little heavier than normal. Kind of hung around here for a little while. Had some pretty big spreads. This is daily ticks here, each one of these candles. Um, and we go and it's fading, fading, fading. Our volume's increasing a little bit, and it's fading a little bit with increased volume. That means there's probably more shares hitting the market. But you see here that at the end of the day, over 30 cents. They need this chart to stay up as much as possible. It's in their best interest. Let me show you this level 2 again. Now, this is just a snapshot. Beginning of the day, somebody hit the bid at 23 cents and down ticked it. Okay? And the ask now became 23 cents. Well, somebody bought those 23s up and upticked it. Okay? At the end of the day, somebody bought a whopping 300 shares for $90 to make this thing get back to no change on the day because they could not let this chart show downward pressure. Notice all these candles are green. Somebody hits the bid and they paint it at the top. Okay, and that's what you see here on this chart. It's ridiculous. Uh, anyway, this is what I look for in a uh, SEC filing. I can look at an SEC filing in 15 to 30 seconds maximum, learn all this information out. A lot of times I don't even use a chart. If it's got a lot of these figures like a whopping $3,400 in cash, you know, and this big current liability, sometimes I won't even look at the price per share, or I won't even make the effort to even look at the ticker. But in this case, I did because I wanted to illustrate to you. Would I invested in this company? Certainly not above 23 cents because uh, if you see from the, let me pull my, I guess oh, there it is. If you'll see from the level 2 action here, such that it is, um, I doubt if you'll ever get this thing back above 30 cents again unless you have some big promotion and somebody just starts buying. I don't see it happening, but if you were to get some of these, say at you know 20, and just turn around for a scalp and try to undercut this guy here, you could probably make $50 or something. Point is, I wouldn't waste my time on it. This company's going nowhere. They're only in business to do one thing, and that's to sell shares. Um, how do I know that? Well, I've shown you here. They've had $85,000 in revenue in the last 10 years. This company's a joke. Anyway, I wanted to put this out there just so you can see what I look for when I look at it. 10Q. 10K is a little different. Usually a little bit more uh, things in there, especially like ownership of securities and that sort of thing. But I hope you've enjoyed this. I do have another one that I want to do, another video I'd like to do on showing what some of the companies do to prop up their balance sheets. And it's especially rampant in pink sheets. So I'll try to find a financial document that has that, and I'll post that.